Welcome, investors, to the Absolute Return Podcast, your source for stock market analysis, global macro musings, and hedge fund investment strategies. Your hosts, Julian Klimachko and Michael Kesslering, aim to bring you the knowledge and analysis you need to become a more intelligent and wealthier investor. This episode is brought to you by Accelerate Financial Technologies. Accelerate, because performance matters. Find out more at accelerateshares.com.
Hey everyone, welcome to the Absolute Return Podcast. On today's show, we welcome special guest, Einride CEO Roozbeh Charli. Einride is a technology company driving the transition to electric and autonomous freight operations for some of the world's largest shippers. On the show, we discuss how his background in investment banking, finance, and M&A helps shape the way he leads a deep tech transportation company, why the freight industry is ready for a technology-led reinvention, technological challenges, and why Einride can succeed where others have failed, the one thing that investors should understand about the future of freight, and more. So with no further ado, here's our show on the road ahead for autonomous trucking with Einride CEO Roozbeh Charli. Welcome, Roozbeh, to the show today, all the way from Stockholm. How are you?
Very good, thank you. Thanks for having me.
Yeah, excited to chat about Einride, a really, really cool company. And before getting into the business model, where'd the name come from?
Oh, that's actually a question. So the name actually comes from sort of a Nordic expression. It essentially means the lone rider, and it's pronounced Einride in that context. And it's sort of another word for Thor. So it has its roots in the four Nordic languages.
I always like those background stories to give a bit of additional context. And you also have an interesting background story yourself. Like many public company CEOs, got your start in investment banking with Lazard. Did you want to talk about that experience and then transitioning to more business development and M&A, CFO, then the CEO seat? How did that progress, and how did your finance background assist in that?
No, that's a great question. I think, it's I guess, the boring answer, or slightly boring answer would be to say, that the finance background that I have and with the coming from added from the financial market perspective helped me sort of evaluate the business on financial metrics, have a clear view on, the cost of sort of technology development and its relationship to commercialization, etc. So I think all of that is true, and as it has helped me a lot throughout my journey. Right, but I think it goes back to what you kind of alluded to in the question, right? Of I think the biggest sort of strength that this gives me is the perspective that it has given me of the business over, having joined more than 6 years ago now, and started at Einride when we were about 60 to 70 people and sort of heading our CFO function, and that, expanding the business up to 500 plus individuals, and doing that in the market conditions of 2020 and onwards, and going through all of the different ups and downs of the market. I think that, and starting as CFO, transitioning to COO, deputy CEO, and having I would say a broad experience throughout the business and all the different parts of the business. It also means that I've seen, in relative detail, almost all aspects of the business, and work closely with most of the different teams, our customers, suppliers, partners, etc. So it's given me a broad perspective and understanding of the business and the relationship between our technology development and the commercial side of the business and the financial market aspect from it. And I think having had that experience, I think the key learning for me has been, which I try to adopt in day to day as well, is making sure that I surround myself with people that are much more knowledgeable than me in their respective expertise areas, and at this time making sure that coming at it from the board perspective, but that I have enough detailed understanding to be able to ask the right questions, if you will. And to be honest, I in interacting with the teams and having done so over the last 6 years, I'm still blown away today on almost a daily basis on the depth of knowledge, ambition, and drive the team has, and I'm very proud to be leading the company.
And what you and your team are trying to accomplish, transforming one of the world's oldest industries, road freight, is no easy task. What convinced you that freight was ready for a new technological reinvention, so to speak?
Yeah, no, you're absolutely right. It is a complex market, and it is. And I think, if you look at the freight market, and it has almost all of the characteristics of a market that's primed for change, right? It's a huge market, $4 trillion plus per year in sort of total market size. There hasn't been, being a bit, but there hasn't been a real technology shift in the market since basically the invention of the diesel engine, right? And it's also a market that over a long period of time has struggled with high cost inflation, driver shortages, and ancillary sort of cost increases within the industry. So, and I'm a firm believer that the best way of addressing this is through technology, but I'm also, I would say, in that context, also convinced that the best way of being successful when you're trying to enact the transition of technology in a market like this is to make sure that you address all of the key cost drivers in the market and how your product and technology will help your customers ultimately improve from the benefits that you can bring across those aspects. And that is very much true, I would say, for the freight market and everything from asset utilization, driver costs, energy costs, ancillary costs, etc., and making sure that how can we address all of these different parts and sort of do so across the different cost buckets, if you will. And that is also why we've chosen the technology platform approach, and through the introduction of that platform, bringing about the improvements across all of these areas, and ultimately with the ultimate goal of achieving the most efficient transport network.
So I want to dig into that with respect to Einride's core value add to customers, and specifically, how does your technology platform help customers?
Yeah, and I think it goes back to the platform approach. Right? It goes back to the question earlier around the having a platform approach and sort of with the technology sitting in the middle, orchestrating all the different parts of the ecosystem. It sort of takes out the complexity of what is a very complex technology transition. It takes that sort of the burden of that transition, if you will, away from our customers, and we take on that burden, and we position ourselves between the customer and the technology shift that is happening, and bringing about that change, right? Coming at it from the shipper perspective, and making sure that deployment of our platform and technology creates the most efficient transport network possible for them, and with the lowest cost over time.
And how does Einride differentiate from a traditional trucking company?
So I think that, the way to think about us and is a technology company that brings in and brings together all the different technology areas that makes possible to create the most efficient transport network for our customers. We also do that in a way that does not require our customers to materially change the way that they buy transportation today. We take care of, as I mentioned, all the complexity of this technology transition for them, and we become the provider sort of that technology to our customers. So if you boil it down, right, at the core, we're a technology company using our technology to provide our customers with a superior service.
And one aspect of road freight technology that has had a lot of hype behind it, and certainly a lot of development, is autonomous trucking technology. It is, I'd classify it probably as notoriously difficult. We've seen many companies try to tackle that space, and certainly the successful application could have massive implications, but thus far, certainly it's extremely difficult. How will you succeed where others have failed there?
No, you're absolutely right in that. I think automating transportation of goods is a very complex and difficult task from many reasons and many aspects, right? And I think part of that is also that automating transportation and sort of bringing about that technology shift in the transportation market is about much more than just the autonomous technology in itself, which in itself is a big challenge. But it's about the sort of complete operational setup and operational understanding to be able to actually deploy that autonomous technology into the context of that market and all the surrounding processes, right? So it is a sort of a hard task to take on. My firm belief is that we'll succeed because we've taken a platform approach, because we've taken an approach of a gradual scaling autonomous into our customers' networks. And what I sort of mean by that is that we're not selling autonomous technology to our customers. Like, we're selling a gradual transition to more and more cost-efficient transportation. And in parallel to developing and deploying that autonomous technology, we're rolling out our platform and electric offering with our large multinational transport buyers, right? We have was about $50 million of ARR hitting the books today, 90 million of ARR in our customer contracts, $800 million potential ARR with our customers. And what I want to say with that is that, we're taking them on that gradual journey of gradual scaling autonomous technology into the networks, and we're building our commercial business in parallel to developing and deploying our autonomous technology. And all of this means is that we're creating an operational and data position in all of this that will be unique and allow us to gradually scale more and more autonomous into the networks as it makes financial sense to do so. And as I think all of this makes us resilient and gives us a unique position to some of the world's largest transport buyers. That's why, I think our approach differs, and that's also why I think we're going to win.
So just so investors can get a little bit of context into the financials of the business and the financial prospects, can you talk a little bit about the unit economics of the business, how they currently look and how they're expected to scale?
Absolutely. So if you look at the unit economics of our electric offering, we're focusing in on bringing about that initial steps in that transition with our customers. We're doing that with sort of contribution margins sitting today at around the 25-30% mark, increasing with about 10-15 percentage points over the next few years, and that's excluding the introduction of autonomous, which will of course be that big step change in the unit economics. And what will drive the margin expansion for our business over time will continue to be a combination of higher utilization in our networks as we deploy more and more capacity with our customers. There will be a lowering of the hardware costs related to those deployments, and of course the gradual implementation of autonomous technology, improving the operational costs.
Now, you mentioned 800 million of potential ARR. I was wondering if we could dig into that. Let's look at it from the potential of a customer, and they want to sign up for Einride's technology platform. What is included in that platform? What sort of offering would that entail?
So that is, so if you look at that 800 million, that's basically us having gone through the journey of taking in our customers' data into our platform, analyzing that data, and setting a joint scaling plan together with them, or basically saying, this is how we're going to transition your network over the next X number of years, and setting this is what we're going to do the first year, second year, third year, fourth year, etc. So an analysis of how that transition is going to happen, and setting that joint ambition with the customers, and what we then then we start deploying towards that with the operational contracts. So that's the 92 million or 90 plus million that I mentioned earlier. And what that encompasses is the freight capacity as a service. So we will install a certain freight capacity that we will guarantee to the customer over usually a 5-year period. So our average in our contracts is about 4.5 years. And so they're paying for that entire sort of service, including the platform, and the transport service, and the installed freight capacity.
And would you be able to give a current example of a customer?
Yeah, absolutely. So I mean, we have GE Appliances is a perfect example of one of our customers that we worked with. It was one of our first customers in the US. We expanded into the US back in 2021. We started off with signing a joint business plan or both scaling plans together with them for about $50 million of potential ARR, after having looked at their transportation data and sort of analyzed that and come to the conclusion of this is how the transition is going to look for you. And then we started deploying. I think our initial deployment was 2 or 3, capacity equivalent to 2 or 3 electric trucks and an autonomous pilot. And we've since then continued scaling that together with them. And we're now, I think, deployed about 20 trucks together with them and 2 autonomous.
And it all sounds great. And that, living in Stockholm or we're up in Canada, sometimes weather gets in the way. I was wondering, are there any use cases that make it difficult for your electric heavy-duty trucks or autonomous freight if inclement weather or things of that nature happen?
Well, I think weather plays a role, right? If we're talking specifically about temperature, predominantly plays a role, right? If you're on electric, in terms of the capacity, how the effect that it has on the batteries, and that's one of the hundreds of factors that we take into the consideration when we do the operational planning and daily sort of planning that happens on our platform as it comes to how to run and operate the operations at that specific day based on, for example, temperature. So it plays a role. It's not a we're operating in Sweden with to minus 30 degrees Celsius. We're operating in Dubai, for example, electric trucks, where it's the opposite, but in terms of temperature. So it's just a factor you have to take into consideration. I think it's hard to give a sort of categorical answer to these are the use cases that work with electric, and these are not the use cases that work with the electric, because there's so many aspects that comes into play. The economics of it, the density in the network in which you're deploying those trucks, the tech specs of the vehicle, the access to charging infrastructure, the operational setup, etc. So it's a sliding scale, if you will, depending on the operational setup. I think we've so far primarily focused on point-to-point transportation, shuttle flows or milk runs, because they would usually have characteristics that are well suited for electric if they're planned and optimized in a good way. I think some use cases, extreme long haul, for example, or certain mining applications, etc., will be examples of where they would be more challenging for electric.
Right. And from the perspective of a customer, can you talk about the benefit to them? Where are they seeing the Einride platform pay off? Is it reduced cost, increased efficiency, better environmental metrics? How do these things look from the accretive nature for a customer?
No, I think the transport market is primarily driven, and what our customers are mostly interested in is the cost of the service, the reliability of that service. So your ability to live up to what you're saying that you're going to do, and sort of the environmental factors that come in as well. But primarily, it's a cost-driven market. And so where we're able to show value to our customers is that we're able to show them we can transition your fleets into electric and do that at a cost parity or cheaper to the diesel equivalent. And we're able to do that through the planning and optimization that happens on our platform. We're also able to take you through that journey to automation, which will gradually lead to a lowering of your transportation cost. That's number one. Cost is the absolute most sort of key driver for interest from our customers. Secondly, of course, is the reliability, right? So we're able to show that we've got a 99.8 or so SLA fulfillment. We're able to show that quality of the service and traceability in the platform of that, right? And that they're able to see that not only because we're saying it, but they can also see it through data on the platform. So those, I would say, are the key factors.
And transitioning to electric seems like a good timing for your company, just given the spike in fuel prices, given the conflict in the Middle East, and also what's a coincidence in terms of timing, the going public transaction. So Einride announced plans to go public through a merger with Legato Merger 3, $1.8 billion valuation. Why is now the right time to go public?
So I would say we decided in early mid-2025 to start moving towards public markets, and we saw that it's been having access to public markets, specifically U.S. capital markets, has been an important factor for us over for a number of years, and we saw that we're now at the maturity level of the business, and both in terms of where we are, but also the immense opportunities that we saw in front of us, and decided that it was a good timing from a company perspective to start moving towards public markets. The SPAC market had also opened up, in early 25. It started to open up again and presented a sort of, from our perspective, a faster and more efficient path to get to public markets. So, and I think that sort of resonated well with what we were trying to achieve, and I think it's resonated well, where we are as a business, our proven commercial model, and sort of laid out scaling plans that has sort of resonated well also with the investors.
And what has that investor feedback been?
So I think generally what the investor interest and feedback has been that investors like our platform sort of approach, proven commercial model. We have these scaling plans together with customers. We just announced a few days ago Amazon as one of our key customers in the US, and so I think our ability of a proven commercial model and proven scaling model resonated well with investors. I think also having the actual operational experience with autonomous deployments with customers has also been a key factor for that that investors have liked. They've also seen and how that sort of spills in also into potential defense applications and other use cases or dual use type use cases because we have that operational experience. So overall, I would say we've had good feedback from the investors.
And for investors looking and evaluating the Einride story, what should they focus on?
That's a good question, and these things are usually good in threes. So I'll try to boil it down to 3 points. I think they should look at our ability to attract and scale with the largest global transport buyers in the world, and understand that reflects the power of our technology and commercial model. They should look at the unique market and data position that the advantage that gives us in operationalizing and putting autonomous technology into the market over time. They should also keep an eye out for some of the exciting things we have going on within the defense dual use space. I think this presents a huge sort of untapped opportunity for us, and with the success of our initial pilots within the defense space and the appointment that we went public with a while ago with General Keith Alexander joining our board, I think we'll have a lot of exciting things within that space, which presents sort of a so far untapped opportunity for us.
And from a macro perspective, I'd like to get your insights on kind of where you see this business going over the long term. And if you're talking to investors, customers, policymakers, what's one thing they should understand about the future of freight, and where do you see it going in, say, 2 or 3 decades?
Yeah, no, I think, to give the short answer to that is, freight is the backbone of the economy in basically all countries that you're in, right? And I think that the shift to autonomous and to electric and autonomous is going to happen. It's going to happen for the sole reason that it will be the cheapest and safest way of running a transport system. So the unit economics of the market, the safety aspects of the market will drive the transition towards electric and autonomous. It's not going to be true for every single application. It's not going to be true in every single country. But overall, from a macro perspective, that's the path that the market is going to take. I think it's also in that, in presenting that view, I think it's also important to highlight that the transition it's not an overnight technology shift. This is not a switch on and off type of technology. It's a complex endeavor, as we've discussed throughout this session, right? And it will happen gradually. It will bring about the new sort of technology position and era in that market. It will bring about changes in the dynamic of that market, but it will happen gradually and with the maturity of technology, commercial models, and operational experience.
And with respect to current operations, anywhere we can see Einride vehicles in the wild these days?
Absolutely. You can see them across 7 different countries, across Europe, US, and the Middle East. You can see our autonomous applications both in the US and Europe, and more deployments coming both in US and Europe over the next few months as well. So you can absolutely see them a little bit everywhere in the world.
That's great to hear. And Roozbeh, thanks for coming on the show today, telling us the Einride story. Really exciting. Looking forward to the going public transaction and monitoring the growth and potential of the business. So thank you very much, and wishing you the best of luck.
Brilliant. Thank you so much. Thanks for having me.
Bye, everyone.
Thanks for tuning in to the Absolute Return Podcast. This episode was brought to you by Accelerate Financial Technologies. Accelerate, because performance matters. Find out more at accelerateshares.com. The views expressed in this podcast are the personal views of the participants and do not reflect the views of Accelerate. No aspect of this podcast constitutes investment, legal, or tax advice. Opinions expressed in this podcast should not be viewed as a recommendation or solicitation of an offer to buy or sell any securities or investment strategies. The information and opinions in this podcast are based on current market conditions and may fluctuate and change in the future. No representation or warranty, expressed or implied, is made on behalf of Accelerate as to the accuracy or completeness of the information contained in this podcast. Accelerate does not accept any liability for any direct, indirect, or consequential loss or damage suffered by any person as a result of relying on all or any part of this podcast, and any liability is expressly disclaimed.